All right, folks. Well, thank you so much, Jeanette and the TradeThirsty team. The only way I agreed to come on and do the presentation is because Jeanette, I knew she was a serious Alabama Crimson Tide fan. So I said, well, I guess I can present. Just kidding. We go back a long ways. Jeanette's a great friend, great person, and was very gracious to have me on today with another awesome mix of presenters, including Serge and Mark and the other guys and coming on this afternoon. So appreciate everybody taking their time to be here. I can almost guarantee you that this is a much better place to be rather than being trampled at Walmart or Best Buy or anything like that. At least you're going to learn some solid education and probably even get some better deals. So just do me one quick favor, type a number 3 in the chat if you can see my screen and hear me loud and clear. And we'll go ahead and get started here. Don't want to waste anybody's time. We are limited, so we're doing pretty good, I think, as far as time goes. All right, well, hope everybody's doing well and rested up, having a good week. You are here to see my mechanical done for you strategy, any market, any time frame. And again, really excited. My name is Silas Peters. I'm the founder and trader of seasonalswingtrader.com. And this is really my favorite presentation. Why? Because it's something that I actually use. I use it every day in my trading on an intraday basis, swing trading basis, long-term position trade basis. And I can almost guarantee that you will learn something that you can walk away with today and begin applying immediately. So as always, I know this was covered by the TradeThirsty slides, but we must always go over our risk disclaimer as required by our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. As they say, don't trade with your rent money or your milk money. So let's go ahead and get started. I'm going to introduce myself once again. My name is Silas Peters. I am a proud husband, also proud father to these beautiful blonde-haired, blue-eyed beauties in front of my alma mater, which is the University of Alabama in Tuscaloosa. So no joke, got a big game tomorrow. Probably doesn't mean a hill of beans to most of you, but got to throw it out there. Roll Tide. So 3 days after I graduated University of Alabama, I sold my car, packed up my small belongings, and I moved to the great city of Chicago, the old Windy City. And that's where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And here where I was really bitten by the trading bug, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, working with large block order flow for hedge funds, banks, CTAs, large floor spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms. I've worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And in 2016, of course, I launched Seasonal Swing Trader. So enough about me. Let's talk about you. Is this your trading desk? Does your trading desk look like this? Anybody's desk look like this? I certainly hope not. This is not my desk. This is probably a poor joke. I found this picture on the internet, thought it was funny at the time. Not my desk. It does not need to look like anybody's desk, frankly. Obviously, it did look like this, very similar, in fact, when I was working in Chicago for obvious reasons. But now that's certainly been pared back to about 5 or 6 monitors, with watch lists and charts, and then the day-to-day operational stuff. So cool. Nobody's trading desk looks like that. All that is bad for your eyeballs. So we do not need all of this. So we're going to keep with a theme, and that's just the KISS principle. Paralysis analysis. Are you a victim? I appreciate everybody's interaction so far. So raise your digital arm if you are currently a victim of paralysis analysis. I'm raising my hand. I have been a victim of paralysis analysis, but thankfully I am no longer anymore. Per Wikipedia, it's the state of overanalyzing or overthinking situations so that a decision or action is never taken, in effect paralyzing the outcome. So I'm seeing a lot of people saying yes, that they have been or they are, and that's pretty common. It's pretty common. So what I'm going to try and do is we're going to maintain a theme that trading is not easy, but it can be simple. And so what I have in store for you today, it should be self-liberating. So what do you trade? I like to see who I'm speaking to. Do you trade stocks, options, futures, forex, cryptocurrency, any or all of the above? I see a lot of stocks and options traders. Options, crypto. Okay, I don't usually get too many crypto traders in here. Futures and forex, mostly stocks and options, and that's pretty typical when I'm in these presentations. So I actively trade stocks, options, futures, and forex. Do not actually trade crypto. I do have some various accounts across the internet. Don't even know if I can get into the dadgum things, but I view those more as a lottery ticket. Don't actively trade them, but I do actively trade the first four. So mostly stocks and options, and pretty good mixture of each though. So what I'm going to share with you today, regardless, is highly accurate, it's profitable, it works in all markets, which is what we just discussed, all time frames, and it's 99% mechanical. And most importantly, it is simple. So my agenda and promise to you today is we're going to learn a simple and mechanical setup that is repeatable regardless of the market or time frame. And there's going to be some point in the presentation this morning where I'm going to ask you, did I fulfill my promise to you? And I hope to see a lot of yeses. So speaking of promises, we have, if you are here today or have been on seen any of my emails, you may have seen or read about this $10,000 trade promise. Well, what is the $10,000 trade promise? I certainly don't promise anything in trading, can't promise anything in life. But these were trades that we talked about weeks and weeks and weeks, if not months in advance, in multiple free presentations, as well as in our members community. We talked about these $10,000 trades that were have the potential of lining up and achieving $10,000 plus per contract and then some. And those were in crude oil futures, unleaded RBOB gas, and we also had one in nat gas, which you don't see on this chart, for two primary reasons. One, the chart pattern or the strategy that I'm going to share with you here momentarily, and also the concept of just simple seasonality patterns. So those went on and met their $10,000 trade objective and then some. We also talked about sleeper markets. We talked about markets, again, weeks in advance of potential ideas in coffee and orange juice. You can see over here on the chart that we have the 5, 15, and 30-year price averages kind of bottoming out or being lulled to sleep at this very specific time of the year. So that puts us on alert. We know that we need to be watching for a particular pattern, which you're going to learn here in a few moments, and get ready to get on board. Well, what happened in those two markets? They went on and met their $6,000, $7,000, and $8,000 per contract price objective. We also talked about corn, soybeans, and wheat. You can see at this particular time of the year, on a 5, 15, and 30-year price average basis, they tend to bottom out around this time of the year. And that's exactly what they were doing on a price action chart, just on a daily, simple daily chart. And what happened? They went on and met their $5,000, $6,000, $7,000, $8,000 plus per contract objective. And again, those were all notified by one simple pattern that we're going to share with you here in a minute. So who here is ready to see the setup responsible for the equity curve below? And this is actually needs to be updated. And I can guarantee you this is going to have a sharper pointing arrow pointing north because we've had a very good 2019. So let's go ahead and get started. Drum roll, please. It's the 1, 2, 3 pattern, also known as the 1, 2, 3 top or 1, 2, 3 bottom pattern. So who here has heard of the 1, 2, 3 pattern? Who here has heard of the 1, 2, 3 pattern? The 1, 2, 3 top or 1, 2, 3 bottom? Probably 99% of you. So basically everybody is saying yes, a couple of no's, and I usually see a lot of yeses, and that doesn't surprise me. This is one of the most fundamental technical patterns in the textbooks, Technical Analysis 101, but highly, and I mean highly, overlooked by most traders. So let's talk about the concept of the setup. So it's price action based. The pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high in the case that we're going long, inverse if short. It anticipates a change in the trend from up to down on a break below the number 2 or the B point, or anticipates a change in trend from down to up on a break above the 2 or the B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. You may say, Silas, isn't this a counter trend or reversal type strategy? In essence, it is, but we show you ways and ideas to put the odds and probabilities in your favor. I will stress that it works extremely well when the pattern sets up at significant areas of support resistance, other high probability technical patterns such as your head, shoulder, tops and bottoms, double tops and bottoms, etc. So let's take a look at the basic mechanics. So 1, 2, 3 top strategy. Don't worry about what market this is or asset class or time frame. It doesn't really matter. We're just talking about the general principles at the moment. So here on the chart, you can see point 1 giving us highest peaks. This is the highest peak, which finds resistance and then starts to move down. That gives us our starting point or initial number 1. So market moves down, finds support and bounces off of that support. We get an established number 2, 1, 2. Now, the market can trade higher as long as we don't take out the number 1 and finally get our pullback. We have a 3, 1, 2, 3, and we have our 1, 2, 3 top pattern. Now, entry, we're looking to get short on breaks or closes below the number 2. 1, 2, 3, we get short below the number 2, and the market trades lower. Let's look at the 1, 2, 3 bottom. As you would suspect, exact same principles and rules, but just in inverse. So here we have the market that trades lower, finds support, giving us a number 1. Market trades higher, pulls back, giving us a number 2. Market trades lower. We could go all the way down to here as long as we don't take out the number 1, and we stop, we pull up. We get a 1, 2, 3. We know that we're looking to get long on breaks or closes above the number 2. Now, we don't know what happened in this example. You see it trades range bound, but we know we're looking to get long above the number 2. So let's go ahead and look at some chart examples. So we're going to start off here looking at the 1, 2, 3 top pattern. So I'm going to let you guys and gals read the text over here on the right through these next series of examples. I'm going to be looking at the chart working left to right. So here is a daily chart on the Aussie dollar. The 6A, if you don't trade futures or forex, you could look at the ETF FXA. You're going to see the exact same pattern. So here we have a number 1 point. Why is this a number 1 point? Because it's a 52-week high. Now, when we look at a daily chart, we primarily like to look at the 52-week highs or 52-week lows for this pattern, because that's going to yield the highest probability setup for this particular pattern. Now, if you want to dial it in even tighter, say every 6 months or every 3 months or 10 months, whatever, you can certainly do that. But for these example purposes, we're going to focus on the 52-week highs and lows on a daily chart. So here we have a number 1, which is a 52-week high. That gives us our number 1 point. Market trades lower, lower, lower. Once we stop making these lower lows and retrace back higher, we get a number 2, okay? And now the market trades higher and only about 3 or 4 bars and then pulls back. That gives us a number 3. So it's a shallower or more shallow retracement. Again, the market could have traded up here, or even up here. As long as we don't take out the number 1, it would have been a valid number 3. So here we have a 1, 2, 3. We know we're looking to get short on breaks below the number 2, right? So here we get the break below the number 2, and it trades lower and reaches its $2,200 per contract price objective. So how do we know what our stop and what our target is? You say, that's great. I've already understand the pattern. It's pretty easy. So our stop initially must always be above the number 1, so above the high of the number 1 for a short, or below the number 1 for a long. Our target objective is simply the distance between the number 1 and the number 2. So we measure from the high of the number 1 down to the low of the number 2. In this case was about 225 ticks, and we measure that downward. So here's our profit objective, 225 ticks. Okay. Now let's look at a 1, 2, 3 top pattern example on Walmart, WMT. We have a number 1 point here. Why? It's a 52-week high. We have a 1, 2, 3, and now what? We know we've already eliminated what 99% of traders struggle with. Where do I get in? Where do I get out? Where do I put my risk? Where do I take profits? Well, we know via the 1, 2, 3 top pattern, days in advance, where we're getting in, where we're getting in or getting short on breaks or closes below the number 2 point. We know our initial risk is above the number 1, and we know our initial target is the distance between the 1 and the 2. Measure down in this example is about $5, so that's down here. Now I will tell you that initially when you put the trade on, it's about a 1-to-1 risk reward ratio. You have to allow time for the market to make its move. More often than not, you're going to have enough momentum where you can lower your stop, and that's usually areas of above important areas of resistance, significant resistance, so we could quickly move that down, cut our risk down to about half. As the market moves in our favor, you can trail above areas of resistance or below areas of support. Really, we'll talk about that later on in the slides. There's multiple ways to exit or manage trades. Let's look at 1, 2, 3 bottom examples. So here's a 15-minute chart of the E-mini S&P. You can see we have a session low as indicated by the number 1. But wait a second, didn't you say we're looking for 52-week highs or 52-week lows? Well, yes, on a daily chart, but obviously we're not looking for 52-week highs or lows on an intraday chart. That doesn't make any sense. So let's stop and talk about what I define a session low is. When we're looking on an intraday chart, whether it's a tick chart, a 5-minute or 15-minute, whatever, is we're looking for session lows. So if you're not familiar with the way futures and forex markets work, they trade damn near 24 hours a day, 23/6. Open at 5 p.m. Central on Globex session. On Sunday evenings, trade all through the rest of the night, into the next morning, into the next day, closing around 4 p.m. Central. So they shut down for about an hour or so, and then they reopen, and we start the process over. So whenever you start your trading day, whether it's 6 a.m., 12 noon, or maybe even the last hour of the day, last hour of the New York session or whatever, you're looking for new highs or lows from that period, going all the way back left. So here we have a new session low of the day. Market trades higher, pulls back, giving us a 1, 2, 3. Now, aggressive traders would take the initial entry on the break of the number 2, say a tick or two above the number 2 high, and that would have triggered you long into the trade. A couple of alternative, more prudent entry methods would be to A, wait for the market to come back and retest the breakout level, which is right here, or 2 is wait for the market to hook back up and through the number 2 break. So here we get the break above, market trades lower, and then hooks back up above the number 2, getting you long into the trade right here. So you do not incur that drawdown. Now that method is going to work as a double-edged sword. So one, it's going to keep you out of potential winning trades. Sometimes the market busted the number 2, zips up and meets profit target, and you miss out on the trade. But it's also going to do what? It's going to keep you out of false breakouts. So if this one broke out and then immediately reversed and came down and stopped you out, it would have kept you out of some of those trades. That's okay. I prefer the alternative method because there are different markets and different time frames we can look at. Don't worry about missing the trade. There are plenty of trades around the corner. Let's look at a 1, 2, 3 bottom on Apple. Really a hell of a way to catch some longer term serious moves here on a weekly chart. You can see here that we have a number 1 point, a multi-week low. Market trades higher, pulls back without taking out the number 1 low, giving us a 1, 2, 3. What do we also have? We have a double bottom. Double bottom here. You see the market breaks out above the number 2 on this large bullish candle, trades sideways for a few weeks, comes back down and retest. Also, they test the trend line, and that's where we get long Apple. How? We buy Apple stock, we buy call options, we buy call spreads, we sell out of the money put spreads, okay? And you can see that that market trended for several more weeks. So I must show you what a failed trade looks like. They don't work 100% of the time. Sorry to burst your bubble. Nothing in life or trading is guaranteed. So this is a trade on a 5-minute S&P chart. I like this trade setup. I probably had taken this in my live account. I don't know. Here we have a large steep trend line. We get a trend line break. We have a new session high, 1, 2, 3. You're either getting short on the breakout here below the number 2, or if you wait for the alternative method and wait for the hook back down, you get triggered on this bar. And it's probably good for a point or two of profit. If you had exercised some type of money management, you moved your stop immediately down here above the next area of resistance, cutting your risk in half, stopped out there. Or if you didn't do anything and sat on your hands, you're stopped out here above the number 1. And I noticed after I posted this example, we had a new 1, 2, 3 top that actually paid. So here we had a 1, 2, 3, get a breakdown below the number 2, get the retest, and that one's actually a profitable trade. Let's look at the no trigger trade. This is neither good, bad, nor ugly. It's just an example of a no trigger or avoided trade. So here we have a 1, 2, 3, looking to get long above the number 2. What happens? The market trades lower, takes out the number 1, and we start to count over. Here we have a 1, 2, 3, Market trades lower, takes out the number 1. We start the count over. 1, 2, 3. We finally get triggered long. And I do want to pause and tell you that when this occurs, when we get these multiple failed trades, these provide some really good opportunities. Why? Because the market is, one, it's making lower lows, giving us a better value buy. Just think of the opposite. If we were trading higher, new highs, we have a better, higher price to sell. Secondly, we most likely have some type of divergence going on. So if you're not familiar with divergence, that means the price is making lower lows, lower lows, lower lows, but we're having divergence on some type of other oscillator, whether it's an RSI, stochastics, MACD, it doesn't really matter. You're having higher lows or not making lower lows on the divergence indicator, but you're making lower lows on the price. So that is divergence. So those provide some really high probability setups. 1, 2, 3 pattern trade management. Again, confirmation of entries on a break above or close above the number 2 or B point for a long, a break or close below the number 2 or B point for a short. Exit strategies. If you're trading one contract, I would stress just try and achieve the distance between the 1 and number 2 points for your initial target objective. It's uncanny how often the market will go tag that almost to the tick and often reverse. Now, if you're trading multiple contracts, whether you trade multiple futures contracts, options contracts, shares, that's where you can exercise your discretion on how to manage or exit the balance of your position. They come a dime a dozen. I can't tell you how to manage or exit the rest of your position. But me, I like to use good old-fashioned support resistance levels, Fibonacci numbers, moving averages, but there's also trend lines, 2 to 3 bar candle stops, PAR-SAR, and the list goes on. You have to determine what works best for you in your situation. So I've told you that the setup works on any market, whether you're trading pips in the forex market, Pepsi stock, pot, either potash or pot stocks, bellies, or the Polish zloty, and on any time frame, whether you're trading a tick, 15 hourly, 240 daily, etc., and any trading style. So tell me, are you a position trader? Are you a swing trader? Are you a day trader? Are you a scalp trader? We'll take a swig of water here. Tell me what your trading style is. All right, so mostly swing traders. I see a couple of tick traders. Day and swing, long-term position, scalpers. Scalpers, tough. Good. So really the point of that is you have to determine what your bread and butter is. You have to determine what your bread and butter is. And mine, I like the 5-minute on the S&P and crude oil. I also like the hourly and 4-hour on some of the currency futures and commodities, and then daily. I mean, that's really where it got started, where I started my trading journey, is just trading off of the end-of-day charts. And frankly, that's probably best for most people's situation. So that's where I started. This was, long before, we were sitting there checking our smartphones and our cubicles and all of that. Didn't have that luxury, if you want to call it a luxury. So I was looking at end-of-day charts late at night, early in the morning. I'd place my trades accordingly, go off to my 9-to-5 corporate job, come home, see what happened. And that was probably the best thing that could have happened to me, instead of staying glued at a tick chart trying to scalp the market all day long. So you've seen the proof. Let's look at some real trade examples. In fact, we've already been looking at real trade examples, but let's look at some real trade examples that we've used in our services. So again, you can go along here on the right-hand side. I'm going to be looking at the chart and working my way left to right. So let's take a look at crude oil. Everybody's familiar with crude. It's probably the most watched or most traded market in the world, aside from gold. And so we look at crude, whether you're trading crude futures or USO or anything like that, you're going to see the exact same pattern. So here we have a daily chart. We have a 1, 2, 3. This is the number 1 because it's the 52-week high on the daily chart. We have a 1, 2, 3, smaller 1, 2, 3. So if you're, you may have had to been a little bit quick on the eye to catch this pattern. It's a shorter 1, 2, 3, but it is a valid one nonetheless. So here we have a 1, 2, 3. and we're looking to get short on breaks below or closes below the number 2. We knew well in advance where our risk was and what our target objective was. That was $3 or $3,000 per contract, okay? And so we had that happen, met our $3 move very quickly, and then the market went into consolidation or range. Now, you may say, well, what about this? Isn't this a 1, 2, 3? Well, yes, it is. We have a very beautiful 1, 2, 3. In fact, 1, 2, 3, get long above the break, and you would have been in profit. But on a daily chart, I'm looking for either the next high up here or a new 52-week low. So a new 52-week low, new 52-week high. I'm not interested in trading all the noise, looking at multiple other markets, so I'm not worried about doing all the range trading. So here we have a new number 1. Why? Because it's a 52-week high. This high is higher than that, so it's a new number 1. So we have a 1, 2, 3. Again, a smaller one. It's a $4 profit objective or $4,000 per contract. Now, again, the beautiful thing about trading off of an end-of-day chart or daily chart is you had multiple days to get into this trade. You see, we had 4 or 5 days of retest before we could get short. So when I saw this trade set up, I got very excited. Why? Well, one, I get excited when I see any of these patterns set up because we have the high probability 1, 2 top pattern, which we've been talking about. Secondly, we are putting in a 1, 2, 3 top at a time of the year that has a very high probability from a seasonal perspective to move to the downside. So when I see those two things lining up, that's what I like to call the perfect marriage in trading. So we got short crude. How did we do that? We shorted crude futures. We bought put options. We sold out money call spreads. We traded USO and other leveraged ETFs. You can see that we quickly met its $4 profit objective and then some. In fact, this market or this short traded down over $20,000 per contract. Now, we did not catch the entire move, but we damn sure caught a large chunk of it, and we continued to trail our stops until we got either a reversal pattern or we got stopped out. So here we have a potential 1, 2, 3, 1, 2, 3. It doesn't confirm because the market makes new lows, taking out that number 1. Here we have another potential 1, 2, 3, 1, 2, 3. And this is one I'm starting to lick my chops at again because why? We have a very high probability 1, 2, 3 bottom pattern. Secondly, from a seasonal perspective, at this time of the year, this is one of the most highest probability seasonal patterns at this time of the year for crude oil to go long. And then third, we have probably my second favorite technical pattern, which is a triangle, very beautiful triangle. So I'm looking to get long. What happens? The market breaks down, takes out the number 1 low without taking out the number 2. We start breaking down. We finally get a new 1, 2, 3 bottom. In fact, this went down another $10 or $10,000 per contract, and we have a new 1, 2, 3 bottom that went and met its profit objective and then some. So I want you to remember this chart here in a few moments, as well as the subsequent charts, because I'm going to show you something very special. Let's talk about gold. Now, this is actually a chart of GLD, the ETF that tracks gold. Again, it doesn't matter if you want to look at gold futures or the ETF, you're going to see the exact same pattern. I personally, when I'm looking at futures or commodities, I like to look at the futures or commodities first because you're going to see a lot cleaner chart. They're more fluid. You're not going to see all the gaps because they're trading around 24 hours a day. But regardless, you're going to see the same pattern. So here we have 3 setups in GLD. We have a 1, 2, 3, very clear. Market breaks down below the number 2, gives you a couple of retests. That's how we get short, or that's where we get short gold. We short gold futures, buy put options, sell out money call spreads. Reaches its $4 profit objective. We turn around and we get a new buy. 1, 2, 3. Also happens to be a small double bottom. We get a break below the number 2, retest, reaches its $2 profit objective. Now here we go again, similar to that crude example. You say, Silas, you missed a huge short right here. Well, maybe I did, maybe I didn't. I don't really care. I'm watching 35 other commodity markets, 35 currency markets, and hundreds, if not thousands, of other equity and index markets. I'm not worried about it, but this is a nice 1, 2, 3 and a very nice short. Again, I'm out of this trade. I'm looking for a new low or a new high for a new swing trade off of a daily chart. So here we have a potential 1, 2, 3, 1, 2, 3. Looking to get long above here. What happens? Don't know if you can see it. but we get a gap down, takes out this number one low by a small hair, and we start to count over. No worries. 1, 2, 3. We get long. Well, actually, the market gaps higher 2 days in a row. Boom, boom, comes back down. A retest also gives you a trend line retest. Can guarantee you don't have a gap there in gold futures. But anyway, that's where we get long gold. So, I mean, how many newsletters or people on TV are talking about gold? You know, people are obsessed with the direction. Well, gold's going to go here. Gold's going to go here. The economy's going to hell in a handbasket. You know, buy gold. Who cares? Who cares about all that nonsense? Look at the price action, look at the charts, and look at these nice, beautiful swing trades that you can take advantage of. Let's look at a daily chart of Delta Airlines. Here's 4 trade examples on Delta. Daily chart, 1, 2, 3. This is becoming redundant now, isn't it? You can see these patterns appearing over and over again. 1, 2, 3. Market gaps up, comes back down and retest. $4 profit objective. Here we're 1, 2, 3. Market gaps down below the number 2 and continues to trade lower. I personally don't really chase these. I like to see the retest or the hook back down, but we do have students and members that will trade all these, so they're aggressively selling the stock or buying put spreads here into that move. We do get another chance to short Delta, 1, 2, 3. Market trades aggressively on the number 2 breakdown. We get a small retest here. That's good for an $8 plus move, and then we get a long trade here, 1, 2, 3, breaks above the number 2, trades higher, pulls back, and it goes on for an $8 plus move. Forex. This is a 4-hour chart of the CAD Swissy, Canadian dollar versus the Swiss franc. Here we have a multi-session low, 1, 2, 3, also have a double bottom. Remember, the aggressive traders will be looking to get long on breaks right here, boom, or if you choose the alternative, more prudent method, I guess, you get the retest here or the hook back up above, reaches its 70 pip profit objective. And then we have a smaller 1, 2, 3 top up here, breaks down below, gives you a couple of retests or the hook back down and reaches its 40 pip profit objective. Here's a chart of Nasdaq, the mini Nasdaq on a 5-minute chart, 3 trade examples. Session low gives us a 1, 2, 3. We get a head fake up here, or so you're either getting long or you're waiting for the hook back up above, reaches 13-point profit objective. Here we have a 1, 2, 3, breaks down below, several minutes go by, causing us a little bit of heartburn, finally breaks down and reaches its 20-point profit objective. We get one last long of the session, 1, 2, 3, breaks above. If you're lucky enough to buy on the retest here, you're filled in about 2 bars for 30 points. Okay? So why are you here? Why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. So this is the point in the presentation where I'm going to ask you, have I fulfilled my promise to you? Have you learned a simple mechanical setup? I'm going to take a swig of water here. Hopefully I see a bunch of yeses come into the chat box. Awesome. All right, I appreciate that. Yeah, and I do see a lot of questions coming in too, and I promise I'll try and get back to those if I have time. I want to make sure we get through all of the core pieces of the strategy so you can understand it. All right. But I have some last words for you. But wait, famous last words. Famous last words, or as they say in the South, hold my beer and watch this. Usually doesn't end up being very good for that person, but this I promise will. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be quite a treat. So do you remember the examples from earlier? I hope you do. It's just a couple minutes ago, but I said, remember these charts. So do you remember the crude oil chart? This is a daily chart of crude oil. Same one we just looked at a few moments ago. So let's take a look here at, we'll look at this example here in the middle, okay? Remember that we had the 3 setups, that short, and this long. Let's start off here. So what are all these arrows? You're smart boys and girls. I'm sure you've already figured it out. Here we have the green arrow. That's our number 1. The red arrow is your number 2. Your blue arrow is your number 3. We have a 1, 2, 3. Okay. Now, what is this white chevron or this sell signal right here? Well, that is not a sell signal, and this is not a buy signal. This is simply telling me that, hey, we have broke or penetrated the number 2. So since this is a 1, 2, 3 top, this is saying, hey, we've broken the number 2, so we're pointing lower. Down here, saying, hey, we've broken above the number 2. So it's just another visual aid waving at us saying, hey, we have a potential confirmed 1, 2, 3 top or 1, 2, 3 bottom. So if and only if we get that break of the number 2 here or here, you're going to see the white chevron print on your screen. Oops. And if and only if that happens, you're going to see these 4 beautiful lines plot onto your chart. So what are these 4 lines? So the blue line here is the breakout level. It could be considered the entry level. The red line is your stop or your risk level. The lime green line is your first profit objective, TP1. I call it take profit 1. Remember, that's just the distance between the 1 and the 2 measured down. Your dark green line is TP2 or profit objective number 2, and that's simply 2 times the distance between TP1. Okay? Now, remember this. So you may say, what are all these green arrows? Why are all these green arrows on here? It's because it's saying we're making new lows, new 52-week lows, new lows, new lows, new lows. We finally stopped making new lows. We get a 1, 2, 3. We would be looking to get long above the number 2. What happens? The market breaks down, takes out the number 1 low. We start to count over. 1, 2, 3. Remember, this is the one that I was just really looking to push up and get long. Market breaks down, takes out the number 1. So since we took out the number 1, we did not take out the number 2, we get no chevron, we get no lines. Here's that last trade example, 1, 2, 3. We break above, our lines plot, hits TP1, TP2, and off to the races. Here's the same chart example on gold. GLD, 1, 2, 3, breaks above, it's TP1, TP2. Here's that range trade. Remember, depending on your settings, it may or may not have caught this. Remember, I'm only looking for new highs or new lows. Here's all this noise down here. Remember, looking for new 1, 2, 3. We actually make one new low down here, 1, 2, 3. We go boom, boom, come back and retest, hits TP1, TP2. You can see we're starting to make a new 1, 2, 3 top up here at those highs. Remember Delta Airlines, DAL? Here are those 4 chart examples. Here's your long, here's your short, and there's your long. And the 5-minute Nasdaq chart. So now with the introduction or invention of the micros, really levels the playing field, whether you trade S&P, NASI, Dow, or Russell. There's the micro contracts now that you can trade these without losing sleep or breaking out into sweats because of the volatility. They're now affordable for most folks. So here we have a session high, 1, 2, 3. It breaks down below the number 2. It's TP1, TP2 to the tick. Here we have this TP2 also happened to be a new session low. 1, 2, 3. We get a little break above or the hook back above, hits TP1, almost hits TP2, good enough for government work. And then here, so people ask, does it work in range-bound markets? Well, theoretically, yes, because we're only looking for new highs or new lows, right? But if you want to trade, all these little moves inside, go for it. Help yourself. We have a new low here, 1, 2, 3. You can see it. We just break above the number 2 high here. Again, wait for the break back above, hits TP1. And as we're working up to TP2, we're also putting in new session highs, starting a new 1, 2, 3 top count. 1, 2, 3, market trades higher, takes out the number 1. We start to count over. 1, 2, 3, break down below and or the hook back down, hits TP1 and hits TP2. So is this training for you? Only you and you only can answer that. If you're new to the markets and really want to jumpstart your success, if you're an experienced trader and want to just add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, paralysis analysis, you just want to simplify your trading, add new strategy, or if you want a specific step-by-step plan and avoid learning everything from scratch, this could be for you. In fact, you can do it even very part-time. So one of the things that I did before I kind of released this out is I brought my wife and my 2 daughters down to my office and I wanted to share this with them. So my wife is a ballet teacher. My 2 daughters, who were maybe like 4 and 5 or 5 and 6 or something at the time, they don't know a flying flip about the market. Trust me, don't even know what I do. But I showed them this pattern, this 1, 2, 3 indicator. And I said, you know, first I had to get through all the colors, and the girls thought it would look like unicorns jumping around. I said, okay, let's look at this and let me tell you what I'm attempting to try to do with this indicator and how to simplify this process. So after a little bit of education, they finally understood it. They got it. And so that told me is like, okay, if they can understand it, that means anybody can, including everybody on this presentation. Because if you can log into this webinar, turn on your computer, you can follow this strategy. So I do have a very special offer for today's workshop attendees only. I do limit this to 25 spots because I do manage my own inbox and I want to make sure everybody is taken care of. So we've developed the 3S code high-low indicator scanner for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We're also going to include chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan updates across stocks, futures, and forex based on the 3S code. So in case you forgot about what it looks like, here's what it looks like again. Daily chart of Crude. We have a short, we have a short, we have a long. Here is a daily chart of BAC, Bank of America. We have a long, and then we have a long. Here is a daily chart of Love, LUV, Southwest. We have a short, hits TP1 to the tick. Here is a short, failed trade, that's a loser. We get another chance to short up here, 1, 2, 3, hits TP1, TP2. And remember when I said, why do all of the work when we can let technology do the work for us? This is a screenshot of my Thinkorswim platform. You can see I'm running a scan on 1, 2, 3 tops in the Russell 1000, only stocks that have options on them, $20 a share or greater. I hit the green scan button and voila, I get all of my results. And here is a screenshot of watch list. So I have one monitor that's dedicated to watch list. I'm looking for tops and bottoms across futures, forex, equities across multiple time frames. We've been looking at Thinkorswim. This is what it looks like on TradeStation. Here is your indicator component. Here's your scanning component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. So full disclaimer, there is no scanning component on TradingView or MT4. It's just not available. So the scanner is on TOS, TS, and NT8. No scanner on TradingView or MT4. So this is a 4-hour chart of Apple. And here's what it looks like on MT4. So don't mind the moving averages here. 4-hour chart of the Euro Kiwi. We have a long, we have a short, and then a long, okay? So we know that there's no real crystal ball in the markets, but I like to view this as one that provides me with a process each day, or let the technology or the platforms do the scanning, locates the setups, go to my platform for entry, and then I manage the exits. So you can do the same starting today with the 3S code, starting with the 3S code package. The package is the 3S code high-low indicator scanner for Thinkorswim, TradeStation, NT8, TradingView, and MT4. Chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan setups across stocks, futures, and forex. We've recently offered it on the internet at these prices, no joke, $19.97, $14.97, $9.97. But for this TradeGiving special, we're pleased to announce a one-time fee of $397. So the offer link is seasonalswingtrader.com/code, seasonalswingtrader.com/code. And let me put this in the chat window for you. There it is. I've got questions. I'm going to answer those. That's the offer. Let's talk about this indicator and scanner once more. So you're going to get the visual plot of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, target levels, fully customizable for colors, multiple look back periods. Look, if you want to run your scanners to scan for setups only, Trigger only or both, you have that option. So when we first released this, it only scanned for setups. Then I had communicated with one of my clients, which we do all the time. I love getting feedback. He said, hey, I only want to see those that have triggered, meaning that they've actually broken above or below the number 2. I said, well, let me go back to the program and see if we can do that. We had it built out, didn't charge a single red cent. That was added for all traders. If you don't like the colors, you don't like red and you want hot magenta, you don't like lime green, you want puke green, you can change all those colors. You can change the arrows from dots to hashes or whatever your platform allows. And you can trade for intraday setups as well as swings on multiple time frames and asset classes all at the same time. Bonus number 1, 90+ page PDF manual, going to include additional strategies, options, other chart patterns, seasonal market trends, order types, and more. Bonus number 2, 25 top option strategy guide, literally something for all account sizes and educational knowledge, whether you're just learning to trade basic calls and puts to more intermediate advanced, such as condors, butterflies, calendars, verticals, etc. And then bonus number 3 is you're going to get access to the weekly high-low scan updates, which is located in the members area, updated once a week across stocks, ETFs, futures, commodities, and forex. You're going to get scans based on the 3S code high-low indicator. Here's some additional proof. Here's some proof. These are testimonials that come in to my inbox all the time. I don't ask for them. I don't solicit them. And I'm very humbled and very proud to see these because it shows me that people are actually taking action and making money using the 3S code. So another example of some trades that were used with 3S code. See crude, unlead here, large gains on the euro, pound, also nat gas. And then, like I said, I eat what I cook. So here are snapshots of my real accounts in Thinkorswim, where I do most of my equity options trading, and futures. You see I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And so here again, just an example of a nice, easy, clean 2-point winner on a 5-minute E-mini S&P chart. And these occur every day over and over again. So the offer again is seasonalswingtrader.com/code. You're going to get the 3S high-low indicator scanner for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Again, there's only the scanner function with TS, Thinkorswim, and NT8. There is no scanner on TradingView and MT4. Let me take some questions here. So I've got lots of questions coming in. Let me scroll up here. All right. Bread and butter just ate tons yesterday. All right. Hey, I think that was all. Do I take the tip of the candle wick rather than the candle body for the 1, 2, 3 levels? I take the top, the high. So that would be the top of the wick. What do I consider a multi-session? I think we covered that, but what I covered session. So multi-session would be back, you can use your own judgment there, but say like an hourly, 4-hour, you can, use, again, the settings are fully customizable. Out of the box, what you see is what I see is what you see, unless you want to do a lot of tinkering. I know a lot of people want to do that. They like to get in there and manipulate all these numbers and the distance between this and that. That's fine. Out of the box, it's pretty damn good as is, but I understand people that want to adjust the settings. Multi-session though, for like a 4-hour, I would probably just look on a weekly basis. Again, it just depends on what you define that as a multi-session. That's how I define it. It depends on your settings. Between the 2 and the 3, is 1 bar enough, or at least 3 bars? I generally like to see more than 1 bar, Gene, but again, that depends on the user. And as an owner user, you have the ability to adjust that. You can choose how many bars you want between the 1 and the 3, and you can also choose the percentage retracement that you want to see before the 1, 2, 3 forms. Again, I like it, I like it as is, but you can go in there and adjust as many settings as you want. And Or at least if you want to use it out of the box, just kind of black and white, you could say that at least gives me a starting point and it flags a pattern for me. And then you can go in and say, okay, let me do some further analysis. You know, is this a trade I want to take or not? Yeah, we can take a look at the members area. Give me 1 second. All right, so do me a favor, let me know if you can see this. So once you get into the members area, you can see all of the resources here, how to trade the signals, customizing the indicator, setting up scans, day trading, swing trading. Here's all of your bonus materials, plus a lot of unannounced bonus materials. Here's all of your installation and download instructions. Seriously, folks, if you are here, we're able to log into this webinar, you will have no problem. It should take you about 2 or 3 minutes. Here's Thinkorswim right here, how to add the scanners as well as the indicator for setup and or trigger only. TradeStation V95 and V10 in NT8. Trading View, there's the top and bottom. And then, of course, MT4, okay? There's the top and bottom. So super simple. We are happy to help you walk through it, you know, set up a screen share or something if we need to do that. I would say 99% of people do not need that, but we are happy to help. We want you to be up and running. Will it work for both Thinkorswim and Stration? Yes, Vincent. Yeah, you can load it on multiple platforms. We don't really restrict that license. We just ask that you, you know, be respectful there, and but you can load it on multiple. I mean, I've got it on Thinkorswim, Trading View, and MT4. I don't really use. I do in NTA. Don't really use TradeStation. What bar type does it work on? Any bar type you want. So work on Renko. It does. Tick, yes. That is a lifetime license, Gene. Yes. Now, I hate to say lifetime because unfortunately, I may not be around for a lifetime, but as long as I am around, it is a lifetime. But you can download all this, even the education material, to your desktop. And in case I'm not around, you should still have access to it. Yeah, as far as my favorite oscillator, if you go into the members area, you know, we talk about ways to, you know, kind of ways we trade it, different things that you can use to help add probabilities. I just like an RSI. I mean, I don't think it really matters. If you want to use MACD, you can. You want to use stochastics, that's fine. I like an RSI. Also pay attention to just price levels, important price levels. And then there's a common sense component. Hopefully I don't have to say that, but that applies with anything, you know, especially in trading. Is, you know, I'll try to avoid taking a setup where the buy entry is going right into a 200-day moving average or a sell right into a 200. You know, there are times when that may be appropriate, but generally like to just apply some common sense and, you know, around news and things like that. So we talk about things like that, but I'll wait for extra confirmation situations like those. Can you show scanner of daily setups that triggered today? Yeah, I did update. So like here is a 1, 2, 3 top off of a daily chart. Again, I've got like a dozen of these. So I've got 1, 2, 3 tops, 1, 2, 3 bottoms on stocks, futures, forex, same for 4-hour, 15-minute. All of that. The targets are not fib levels, no, but I do like to use Fibonacci as extra confirmation. Appreciate that, AJ. Look forward. I'll look. Yeah, my email support at seasonalswingtrader.com. I've got a few minutes here. Let's see. Can I show? When I identify the highs and lows, you use intraday highs and lows, you use end of day close values. I'm using intraday highs and lows, using intraday highs and lows, going back to Globex, the Globex session. Penelope, no, we don't have them broken out by platform. So Luckily for you and everybody else, you get access to all. So if you don't want to use it on, Thinkorswim or MT4, just don't download it. Download the platform that you want to use. If you want to use it on multiple platforms, you can certainly do that. After you purchase, you'll receive a purchase thank you and welcome email. Should trigger immediately. You'll get your access info, log in, download, you'll be up and running. Probably not going to do this for E-Trade, James, unless we just have a flood of requests. I don't know if I ever have, but probably not on E-Trade anytime soon. Efron, the offer link is seasonalswingtrader.com/code. Yeah, TJ, if you go to seasonalswingtrader.com. All right. Let me keep scrolling here. Let's see. You own the indicator and scanner. Can you run multiple scans and watch lists at the same time? Yes, absolutely. I think we talked about that. Example, I've got running daily, 4-hour, intraday, so on. You use it to trade options, of course. I love swing trading using the 3S code, trading options. There will be times and places to sell options or buy options. I use this. It's one of my favorite ways to trade it, actually. I do not have a trade room. No, I do not. Sorry. Yes, it does work on tick. I think I answered that. I prefer daily charts or 5-minute. It really doesn't matter, just you have to figure out what works best for your situation, your lifestyle, your risk, your account size, how knowledgeable you are, but probably just what fits your lifestyle, whether you want to trade a tick or a daily. I think a combination is a good thing. Gene, yeah, you can email me at support@seasonalswingtrader.com. I think the offer is good through the weekend, maybe the end of the day. I think I have to ask the host, but maybe through the weekend. But anyway, so yeah, I see a couple more questions. I think I'm being told that my time is up. Support@seasonalswingtrader.com. If you have any other questions, either now or maybe you're after the fact, shoot me an email. I love hearing from you. Love providing feedback, getting your feedback. Thanks, Jeanette and TradeThirsty, for allowing me to come on. Happy post-Thanksgiving, happy Black Friday. Hope everybody has a great weekend. Take care and look forward to seeing you on the inside. Enjoy the rest of the show.